Welcome to another bar walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over bar area 3. This is section C4. This is a remembering and understanding topic. Recall the recognition and measurement requirements for a net pension liability for a defined benefit pension plan for state and local governments. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar. In that 1 hour, for free, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And of course, after that, you're going to want to learn more. So make sure you also check out becoming a pro member, where you get access to the pro course, which is basically a much more in-depth version of the webinar. Or you could get access to the study materials, where we have our audio notes, our review notes, and our mini quizzes. Or you could get the total bundle, which of course has all of that all together. And one of the benefits of becoming a part of SuperFast CPA is that you can get access to the full versions of these videos. A lot of the time, the YouTube version has 5 questions, maybe 6 questions, and the SuperFast CPA version, like the member version, has double that, so 10 or 12 questions. Now, today is one of those videos, just like the previous videos, because this is a small topic in BAR, where the YouTube version and the member version both are going to have 5 questions. But again, the majority of the videos, I swear, have double the amount of questions compared to the YouTube version. So if you find these helpful, the YouTube versions, make sure you check out becoming a part of SuperFast CPA, because that is how you'll get access to the full versions of these videos, so you can get a little bit more help and a little bit more understanding. Currently, those are part of being a pro member by buying the pro course, but we are actually going to change that in the near future to where they are part of the study materials, because we just feel that makes more sense. So, that's how you can get access to those. Now, with all that out of the way, let's dive into the questions for this video to learn this topic. All right, here we are at question 1. And as I mentioned at the beginning of the video, this is not a super big topic, it appears. So we're not going to go crazy deep. We're just going to do 5 questions, but we are just going to try to learn our best. We're going to go through these questions the SuperFast CPA way. One of the best things that you can do is read the last sentence of the question first. Now, it might not always seem helpful, especially when the question is pretty small, but a lot of times it is so helpful to read the last sentence of the question first, because it gives you context for what you're even dealing with, context for what the question is about, and for what you're even supposed to be looking for. So it's a very good habit to be in, especially for exam day, so that when you see a question and you have no idea what you're dealing with, you read that last sentence first, and you immediately have somewhat of an idea of what you're going to be doing. So let's do that here. What should the town recognize? Again, it's not always going to feel as helpful as at other times, but it's still a good habit. So again, what should the town recognize? Let's go up to the top. A town sponsors a defined benefit pension plan for its employees. At year end, the plan's total pension liability is greater than the plan's fiduciary net position. So what are they going to recognize? Are they going to recognize a net pension liability, a pension trust fund liability, a deferred inflow of resources only, or no liability because pension benefits will be paid in future years? Now, just based off of the title of this video, or essentially the blueprint task for this video, you might already know the answer. So if you want, think about it. If not, that's okay. We're going to dive into the explanation to kind of get a feel for what we're talking about in this video. All right, here we are. The answer is A, a net pension liability. You probably already knew that just from the title of this video, but let's go through this. A defined benefit pension plan promises employees pension benefits in the future. So that's the whole point of a defined benefit pension plan, is to make sure that employees have pension benefits in the future. If the actuarial total, so the amount that was actuarially decided by an actuary, so if that amount, the total pension liability, is greater than the pension plan's fiduciary net position, the employer government has a net pension liability. In other words, the promised pension benefits exceed the resources currently held by the pension plan to pay those benefits. So that's what the fiduciary net position is. It's the resources currently held by the pension plan to pay the benefits. So if the actuarial total pension liability is greater than what they actually have, then they have a net pension liability. Since the town is the employer responsible for the plan, the town recognizes that net pension liability. So we learned essentially what a net pension liability is there. It's where the government or the town has fiduciary net position or has stuff set aside for the pension, but they don't have enough compared to what the actuary has decided should be the total pension liability. So that's why they have a net pension liability. So with that, let's go to the next question. All right, here we are at question 2. Which statement best describes how a net pension liability is reported for a defined benefit pension plan? So we learned a little bit about what a net pension liability is. How is it going to be reported? Is it going to be the pension trust fund reporting the net pension liability as a liability on its statement of fiduciary net position? Is it the employer government reporting the net position liability in its government-wide statement of net position? Does the general fund report the full net pension liability as a current liability, or does the pension trust fund report the total pension liability as an expenditure? So we don't really know if we haven't really done this before, which you probably haven't, and we are learning about net pension liabilities. So let's go ahead and go to the answer to learn what we're supposed to know. All right, here we are. The answer is B. The employer government reports the net pension liability in its government-wide statement of net position. So that's how this is going to be reported. The net pension liability is recognized by the employer government, not as a liability of the pension trust fund. And remember, with a lot of these things that we've been dealing with in the past few videos, it's the government-wide stuff, not the specific trust funds. So again, the net pension liability is recognized by the employer government, not in the pension trust fund. For governmental activities, the employer reports the net pension liability in the government-wide statement of net position. The pension trust fund reports the fiduciary net position held through pension benefits. Information about the total pension liability, fiduciary net position, and net pension liability is provided through pension disclosures and required supplementary information. So again, the net pension liability is going to be reported in the government-wide statements of net position. The pension trust fund is the one that's keeping track of the fiduciary net position, which is different. So just make sure that you understand that distinction. When we're just talking about the net pension liability, it's in the governmental activities or the government-wide statement. But if we're talking about the fiduciary net position, that would be in the pension trust fund. So just learning some distinctions, some differences here. Now let's go to the next question. All right, here we are at question 3. Again, reading that last sentence first. What is the city's net pension liability? Okay, again, imagine you were on your exam day and you read that last sentence first. You immediately know what you're dealing with. Maybe it won't always be as direct as that, but you know that you're dealing with a city, so a government, and their net pension liability. So something to do with pensions. That'll just give you context so you know what you're doing throughout the rest of the question. A city has a total pension liability of $640,000, and the related pension plan has fiduciary net position of $515,000. So what's the net pension liability? This is probably pretty easy if you think through this, but if you have no idea what to do, that's okay. Maybe give this a try, pause the video, and when you're ready, come back. We'll look at the answer together. All right, here we are. The answer is A, $125,000. This is pretty straightforward. Net pension liability equals the total pension liability minus the pension plan's fiduciary net position. So again, that's pretty straightforward. What's the total pension liability? It's the amount they're supposed to owe or they're supposed to cover. The fiduciary position is how much they actually have. So if you take how much they're supposed to have less what they actually have, that will give you the amount that is the net pension liability. So $640,000 less $515,000 equals $125,000. Not too difficult. Now let's go to the next question. Okay, here we are at question 4. Which statement best describes the total pension liability for a defined benefit pension plan? Okay, so based on what we've learned so far, we might have an idea of this. Is it A, it's equal to the amount contributed by the employer during the year? Is it B, equal to the benefits paid to retirees during the year? Is it C, it's an actuarial measure of pension benefits attributed to employee service? Or is it D, is it the ending cash balance in the pension trust fund? So based on what we've learned, you might have an idea. If not, that's okay. But go ahead and pause the video, give this a guess, and when you're ready, come back. We'll look at the answer together. All right, here we are. The answer is C. The total pension liability is an actuarial measure of pension benefits attributed to employee service. And we did talk a little bit about this in a previous question, but let's dive deeper into it here. The total pension liability is the actuarial measure, so something that was actually decided by an actuary, of the government's pension obligation for a defined benefit plan. It represents the present value of pension benefits that have been attributed to employees' past service. So this is the amount that is attributed to the past service. This amount is calculated using actuarial methods, and you're not really going to have to do that, so don't worry. Not by simply looking at cash activity for the year. Actuaries consider projected future benefit payments, discount those payments to present value, and use assumptions about items such as retirement dates, salary changes, employee turnover, and life expectancy. So again, that's not something you'll really probably have to figure out during the CPA exam, but it is something that is actuarially determined. The other answer choices describe pieces of pension activity, but not the total pension liability. Employer contributions increase the plan's fiduciary net position. Benefits paid reduce fiduciary net position, and the pension trust fund's cash balance is only one part of the plan's assets. None of those amounts equals the total actuarial pension obligation. So the total obligation is decided by an actuary, and that is the amount that they are saying the employee's past service is worth, the present value of it. And then we compare that to how much the government actually has in their fiduciary net position. Now, with that, let's go to the next question. All right, here we are at question 5. If the total pension liability at year end is $410,000, what is the school district's net pension liability? Let's go up to the top. A school district's pension plan had fiduciary net position of $300,000 at the beginning of the year. During the year, employer contributions were $55,000, investment earnings were $25,000, benefits paid were $40,000, and plan expenses were $10,000. So again, if the total pension liability at year end is $410,000, what is the school district's net pension liability? So we're kind of learning how to calculate it at this point without having the information directly given to us. We're going to have to do some adding and subtracting. So based on what we've learned so far, give this a try. You aren't necessarily going to know how to do it unless you've seen it before or unless you kind of just think through this. But think about how you're going to figure out the net pension liability with the information we're given. Give it a try, and when you're ready, come back. We'll look at the answer together. All right, here we are. The answer is A, $80,000. So let's go through this. It's not too difficult once you see how it works. So first, you start by calculating the ending fiduciary net position. Now, we are not given that, so we have to figure it out. It's pretty simple, though. You take the beginning fiduciary net position, which is this $300,000. You add employer contributions, because that's, money that they're putting in so that they can pay the pension liability. Then you add the $25,000 of earnings. Then you subtract the amounts that were paid, so the benefits that were paid, and you subtract any expenses that occurred as well. So you do that. You take the beginning fiduciary net position, add the contributions, add the income, subtract the benefits paid, and subtract the expenses, and that gives you the ending fiduciary net position of $330,000. Now, based on what we've learned so far in the video, you should already know what to do at that point. Take this $330,000 and subtract it from the $410,000 of total pension liability, and that gives you $80,000 of net pension liability. So not too difficult once you understand what's added and what's subtracted. Again, just think about what it means. If an employer is contributing to the fiduciary net position, that means they're putting money in so that it can then later be paid. So that's increasing it. Again, that's money coming into the fiduciary net position, so that's increasing it. And remember, that is specifically saying benefits paid out to the employees, the people who are supposed to have the pension. So that's why it's subtracted from the fiduciary net position. And then expenses, again, we're subtracting that. It's an expense. So again, not too difficult. As I said at the beginning of this video, this is not a huge topic. You just need to know the basics. Now, before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, the idea behind pillar topics, if you don't know, is as you're going through the questions to learn the material, you will notice the things that keep popping up in the questions. You've noticed 2 or 3 questions teaching you how to calculate net pension liability, or whatever the case is. And so you take a moment as you're going through the questions and you write out the key points, the pillar topics that you are learning, so that you can kind of have a cheat sheet or, basically just understand what is most important for you to know. So with that, let's go to the pillar topics for this video. All right, here we are at the pillar topics. Again, just kind of a summary, basically the most key points that you were supposed to learn or we were supposed to learn from those questions. So let's go through it. A defined benefit plan promises employees future pension benefits. If the pension obligation is greater than the resources held by the pension plan, the employer government may have a net pension liability. Next, the net pension liability belongs to the government or employer, not the pension trust fund. For governmental activities, it is reported in the government-wide statement of net position. Total pension liability is the pension obligation, and fiduciary net position is the amount held by the pension plan to help pay those benefits. If total pension liability is greater, the difference is a net pension liability. Total pension liability is based on actuarial estimates. Again, we're probably not going to have to do that in the CPA exam, but it's good to know what it is, of future pension benefits attributed to employee service. It is not simply the employer's annual contribution benefits paid during the year, or the plan's cash balance. And last, contributions and investment earnings increase fiduciary net position while benefit payments and plan expenses decrease it. This amount is used to help determine whether the employer has a net pension liability. So with that, those are the pillar topics and those are the key things we were supposed to know, and that is the end of this YouTube version of the video. Remember, in most of the videos, although in the recent BAR videos, they've been really small topics, so we haven't done this, but in most videos, the YouTube version is 5 questions and the member version is usually double whatever the amount was in the YouTube version, so probably 10 questions. And if you like these videos, make sure to check out becoming a part of SuperfastCPA so that you can get access to the full 10 question versions. And one of the best ways for you to start understanding and learning about SuperfastCPA is by going to superfastcpa.com and signing up for our free 1-hour webinar training. Again, it's 1 hour, it's free, and we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that, you're going to want to learn more. That's where you want to check out becoming a pro member or getting the extra study materials that we have, or of course the total bundle, which includes everything. Now, if you liked this video and found it helpful, make sure to like it and leave a comment. Thanks for watching, and I will see you in the next video.